Very good morning and welcome to this webinar, this free webinar on Elliott wave trading. Now, I know a lot of people were inquisitive about this. So Elliott पे webinar कराइए पहले भी मुझे काफी लोग बोल चुके हैं. A lot of people have been telling me that please make a webinar on Elliott. Now, with the thing with Elliott is seeing Elliott from far is something, coming close to it is something else, trading is something else. Now, what tends to happen, just like a lot of other things about technical analysis, which I feel have been in many ways tampered with. Okay, many ways they have been tampered with. Say, for example, trend lines. Trend lines have certain rules to be followed. And when I look at internet, when I look at the various WhatsApp groups, etc., I feel that a lot of posts do not portray the correct kind of trend line with rules. Or it can be something as simple as trend line or as simple as any other candlestick concept or anything at all. I feel the availability of a lot of technical material, because the moment people read the first page of a book, the first thing they want to do is go and put their money in the market on the basis of what they read. But it is only till you read the last page of the book will you understand what are the things you should do and what you should not do also. But the thing is, a lot of people don't want to take that effort, right? And therefore, Elliott wave trading becomes very confusing for them. But there is a way. There is a way to understand Elliott elaborately, apply it to your trading, right? Before we begin, the first thing I want to make very clear. First thing, Elliott is not a trading system, it is a tool. What do I mean? Anything you learn in technical analysis, any concept in isolation is never working. In isolation, of course, I mean, it's not that completely it will never work, but yeah, in isolation, you are not supposed to use anything. You cannot take a trade on the basis of one candle. Yes, it may be a very potent candle and you may be getting the correct result immediately. But doing that is not a correct way of applying technical analysis. When you apply various tools of technical analysis together, it is in those times where you are actually going to get the correct kind of results. Now, those who are watching this webinar live, I welcome you all. Those who are watching it on YouTube, I will be sending my Telegram channel link in the description area, so you all can get in touch with me. Now, the entire idea is that in Elliott wave theory, when you see that they are okay, I'm going to check out if there are 5 waves up and 3 waves down, right? The very basis of all those things, there is a certain basis of all those things. You have to get that basis clear first. Why things happen, once you know, if you grab the things from the essence, only then are you able to understand it intimately enough to be able to trade it. And this stands for any concepts. You're able to understand it intimately enough. Only then can you trade it. So, taking up material on Elliott, getting yourself trained in Elliott, getting yourself examples, searching, observing from the past of the charts, what happened 2 years back, what happened 10 years back, what happened 6 months back, what are the different time frames you can study, observing the market live after that. All these scenarios, along with your studies and theoretical knowledge, will equip you to trade in any sort of concepts, trade using any sort of concept. And when you trade using a concept currently, you have to understand that Elliott wave or candlestick or GAN or anything at all at a time, all of that is just a trading tool. It is not a trading system. It's a technical tool. Mixing a few combination of these will get you the correct understanding. Now, some of the very interesting things I'll be sharing towards the second half will obviously need all the information I'll be giving you in the first half. And as it will become interesting, I will show you how you can mix and you can find Elliott in practically everything about technical analysis. That is how potent this concept is. Elliott wave trading, it may not give you a trade every minute, and nothing gives you a trade every minute. But when it gives you a trade, when things are lining up together, it will give you a king size trade, and you will be able to because of your clarity about it, you will be able to hold on to the trade because you know which wave is going where, to what extent and power the wave is showing, what is the construct and the structure of the wave. Once you are able to do that, you have understood Elliott wave theory in a very, very deep way. I am going to show you many examples as well. So first of all, what is the basis of Elliott wave theory? What is the basis of Elliott wave theory? Right? The basis of Elliott wave theory is that number one, there are a lot of people in this world, and all of us are wired biologically. All of us are wired because of nature. And nature, Mother Nature has given us in our genetics, in our way of doing things in the same design as the design that follows in any other creation. That is why it's also called the nature's law. So in any other creation, the shapes, sizes, dimensions, proportions you see the same things in the market also. And because mass psychology is what drives prices, mass psychology drives prices, it follows similar dimensions, patterns, and proportions. That is the first basis of Elliott. Now, a lot of people call me, and very genuinely, very nice people. So, I tell each and every person only one thing. You come to the free webinar, you come to the paid course, you come to me anywhere, I don't mind. But you should come, you should learn. You should learn, you should keep your thinking cap on. Then almost 80% of the people reply to me, Sir, I don't think I'll be able to study now. Sir, I am a little, I'm retired, I'm old. Some people say, I have done an education in science or engineering or medical. I don't know how I will cope up with technical analysis. Now you see, if you do anything else except for using your own ideas, if you go on Telegram and look at how many calls who is giving, if you sit at 9:15 only just to do something for the heck of it, all those are going to be human, natural behavioral patterns. And we are biologically and genetically wired in a way that we will not be able to trade without a strategy, without a basis, without a plan. And because it's your business and you have to execute the business, you need to be clear about what the basis of your plan is, what your plan is. Trading, technical analysis can be very creative. And when there are things which are creative, they need to be applied precisely. If you apply them precisely, you will be able to go ahead and generate those results which only 2 to 5% of the people in the market do. for which you will have to survive the learning curve as well. And the learning curve, more about it, we are going to have a free webinar on trading psychology very soon. So I would like all of you to come there, and how to survive the learning curve. We will get to know a lot about that. Until then, you can check out the other videos on my YouTube channel for the same. Moving on with this, moving on with Elliot. What is the basis? Let's get the basis clear. First basis on the practical note on the chart is that there is a way, there is a way to get both fluctuation and progression. To get both fluctuation and progression. And what is that? What is that? So suppose you are standing over here and I'm standing over here and I'm coming towards you, right? I'm walking towards you. Now, as I'm walking towards you, I can walk in towards you straight, but then you tell me, no, sir, you take one step back, you take one step back, two steps forward, you come like that. I will say, okay, I will take two steps forward, I'll take one step back, I'll take two steps forward, I'll take one step back, I'll take two steps forward, I'll take one step back, two step forward, one step back. I can go in this manner. Now, in this, I'm achieving what? I'm achieving progression, because in totality, I'm still going forward, right? But I'm not achieving enough fluctuation, because when I'm stepping back, I'm stepping just one step back. When I'm stepping back, I'm just stepping one step back. So to be able to get a proper fluctuation in my stepping back, I need to take two steps forward. I need to take two steps forward or three steps forward. Three steps forward. So I'll take step one, step two, step three forward. And while coming back, I'll make it one step back, one step forward, one step back. So I'm achieving fluctuation. So all in all, a proper fluctuation in both the directional movement and the anti-directional movement can only come if you are having 5 steps forward in 3 big steps and 2 big steps back. This is the only way to achieve both direction and fluctuation, progression and fluctuation. I hope I'm clear to all of you. Right? Yes, very good morning. I hope I'm clear to all of you. That this is the only way to achieve both progression and fluctuation, where in the ongoing direction of the trend, they are overall 3 steps forward, but they're divided into 5 steps. And in the anti-direction, they are overall 2 steps back, but they're divided into 3 steps. More on that will come. More on that will come. Second point is, so we understood why Elliott wave theory, because in any given scenario to achieve fluctuation and progression, you need a certain design. And number two, what makes Elliott different from Dow theory? So a lot of students come to me and say that sir, I have read about technical analysis, and this is like in the first session or even before anybody joins me in a course manner. Some new people come and they say, so what happens about Dow theory? I go, I see higher highs, higher lows. I see higher highs, higher lows. Then I buy because it is making higher highs. But then what happens? It makes a lower low or makes small lower lows, and I sell because I don't want to be against the trend. So the trend has changed. And then again it goes and it makes higher highs. I'm not understanding what is the problem, sir. Why does not Dow theory work? Now, first of all, Dow theory is not a radio that it will work or not work. It is a concept, or like any other concept, it is how you apply what you apply, which will prove if something works or not works. Not everything will work for everyone. So if somebody comes and tells you, and I've been seeing this a lot lately, somebody comes and says, forget technical analysis, do price action trading. I don't understand what nonsense they're talking. Simply because, simply because everything is related to price and technical analysis. And the word price action gets a little bit of a impulsive gambling feeling in a lot of people, which is wrong. Which is wrong. A conscious way of analysis and approaching the market will prepare you in ways more than seeking for any other action. So keep this in mind and understand that Dow theory, for example, has a loophole, and just as anything else, alone Dow theory will not work. The loophole is that when there are intermediary corrections in Dow theory, they do unfold in different subwaves. They don't unfold in just one single line. They do unfold in different subwaves from time to time. So in that scenario, it will be very difficult for you to tell that is this a downtrend according to Dow theory, but is this going to sustain or is it not sustain? That becomes difficult to tell. And you are not supposed to be thinking about it in that manner, because Dow theory is going to give you a generalistic idea about a trend, but it is you who have to understand it in totality. Like in the first half of 2018, there were lower lows. Now, according to Dow theory, if there are lower lows, the trend is going lower. But how do I determine that the intermediate trend is going to get over and it's going to go and make higher highs and higher lows? So just by knowing Dow theory, it is not even possible to trade, because you might expect new lows and it will make new highs, and then you will say, oh, the trend has changed. When I meet traders who are very loose to talk, the first thing they say, stop loss kata deta hai. That's such a loose talk. Thing is, you have not done your analysis, you have not approached it in the right manner, or don't know how to take a loss in a healthy manner, right? Going forward, these 2 points I hope are very, very clear to you. Now there is a construct the Elliott wave theory follows, and to achieve that progression, that construct, and that fluctuation, that construct keeps going in a certain manner. The construct is based on two parts mostly of what I will call the wave cycle. A wave cycle can be called as something from this low to this low is the whole wave cycle. Low to low. Cycles are always low to low. Okay. When you read about cycles of any kind, low to low, right? This is cycle. So one Elliott wave cycle is comprised of a certain portion where it is going with the trend, a certain portion where it is going as a corrective structure. So with the trend structure and corrective structure, there are two parts of this entire wave cycle. The construct is made such that all in all, we have 5 waves which are going up and 3 waves which are going down. So we can call it 5-3, 5-3 construction. Yeah, 5 and 3. Now, when we look at the direction of the trend, we will call it motive waves, and they are very often only numbered. They are labeled with numbers, and the corrective waves are labeled with letters A, B, C, right? So 5 waves up, 3 waves down. The basic, all of you which have heard, this is what it is. Now, what it is right now, it may not be shown exactly like that. in the markets. If technical analysis application is difficult, then Elliott wave theory application is even more difficult. Why? Because you have to gather a certain analytical and observation power to be able to see this. And then, because on one fine day, market is going to be generous that you come on a Sunday, you see a webinar on Elliott wave theory, and tomorrow you see a wave. It can happen. It can happen. Tomorrow you see clear 5 waves. Generally, it doesn't happen on an everyday basis, right? Because the way you approach the construction of a wave will make you be able to understand if it is going up, it is going down, or is the construction more compounded. Because in the markets actually the thing becomes totally different, and we will do examples, simple and complicated ones. So this is a compound construction. A compound construction, say, according to it, the 5 waves which are the direction of the trend and the 3 waves which are against the trend, within them there are something we call subwaves. So the entire wave cycle is made up of, firstly it is made up of 2 waves. The entire wave cycle is firstly made up of 2 waves. 1, 2. Now the subwaves, the first degree of subwaves are made up of 8 waves. 1, 2, 3, 4, 5. 1, 2, 3. So to complete a cycle, you minimum need 8 waves, right? Then, if I further subdivide these waves into smaller degree of subwaves, I will get about 34 waves. How? How will I get? I will have to take up each of wave 1 will divide into 5 waves. Why? Because it is with the overall trend. Wave 2 will divide into 3 waves. A, B, C, which is against the overall trend, with the overall trend, against the overall trend, and so on and so forth. And so on and so forth. Now I've come to wave 5 and my count on the side of the direction is over. So how do I talk about it? Whenever I label or whenever I talk about waves, it will be like this. If this is subwave 1, okay, a bigger one, and I'm focusing on this particular wave which I'm marking right now, I will call it 3 of 1, 3 of 1, 3 of 1. If I have to mark this wave, what will I call it? 2 of 5. If I have to mark this wave, I have to call it 5 of 3. Okay. If I have to mark this wave, what I will call it? Wave B of 4. Right. So we are going to understand these constructions and how they get complicated. And because they get complicated, it becomes difficult to decipher where exactly what the wave is. And some of these waves have more powerful areas. Some of these waves are complicated corrections. So I'm going to really help you out. First and foremost, clearing the wheat from the chaff. Clearing the wheat from the chaff, telling you that very clearly. Sometimes it will be impossible for you to say which wave this is. And sometimes it will be so possible for you to say which wave this is that you can put a lot of conviction and say, yes, this has to happen. I can see this is coming up, has to happen. Or you can say, what I see on the waves, there is a high chance of a huge move, that this move can really trend more than it seems like. Most people go about analyzing depending on how things feel to them. Now, developing a feel for the market is a good thing. But if you are analyzing on the basis of how you are feeling, it is a very bad thing. Because you will be getting down into the smaller time frame and start getting a different feeling from what actually is. How many of you are understanding what my point is? Raise your hands. Right? A lot of you are. So you're not supposed to trade on the basis of how you feel about the market. Developing a feel for the market is something which is good, but when you have to approach the market, you make sure the approach is on the basis of a clear analytical background. And then if you go further down, you will get more subwaves. So if you come to a subwave category and you're looking, a lot of people want to go against the trend, looking at the any other concept of technical analysis. They always find reasons to go against the trend. Somebody will come and say, okay, this is made a high now. Why? Because this is showing me a small candle. Just because it's one small candle or just because one red candle does not mean it is made a high. Does not necessarily mean it is made a high. We will like to go against the trend, want to find many reasons to go against the trend by justifying concepts together. Now, Elliott wave theory is good, but another side to it is that it will, if you do it properly, don't over imagine things. Make a plan and plan your trade and trade your plan. This is going to be anyway very applicable to each and everything. First is to plan your trade, then trade your plan. Somebody asked me which is the best time frame to watch Elliott. This is the best time frame to trade. Okay. When it comes to trading, it depends on your personality, right? Depends on your personality. If you are more comfortable taking positional trades, where you don't look at the trades too much, you take a stop loss and you hold on to the trade and you hold on to its full potential. Okay. Um, for you, a sideways movement is 3% on a stock. And if you are a more short term or intraday trader, for you, the sideways movement is less than 1% perhaps. And for you, the movement to capture is 3 to 5 to 7%. So these are the various categories. Uh, if you are comfortable as your personality, then you take the short term intraday calls. If your personality does not want to take too many losses, doesn't want to be wrong often, you want to less frequently trade, then take only trades which are positional. So everything will have its pro and con. Okay. So in a sideways market, a positional trader won't get any trade, but an intraday or short-term trader can still trade. So everything has its pros and cons. The other is, please, Shubhankaji, you feel free to ask your question, not a problem. I'm seeing a lot of questions are coming up, small ones though. I will come to each and everything. The second thing is that when you are looking at Elliott, how did Ralph Nelson Elliott, the founder, the discoverer of this entire theory, he went on to the lowest level of Dow hourly charts. He went to the US index hourly charts, hourly line chart, and he made the necessary thing. But if we go in higher degrees of waves, it works in the bigger time frames. And below what he tested, of course, he tested daily also, but below what he tested, he mentioned, or his People who have written about his theory later have mentioned that Elliot is applicable practically to each and every tick in the market. Practically applicable to each and every tick. So, which time frame to trade? Most important thing to understand is with Elliot, time frames matter less. What matters is the clarity. I may get a very clear Elliott wave pattern on an hourly chart, and the daily chart may still be waiting to budge in the right manner. Obviously, that can happen. I will understand with examples how. But how you will place yourself in the trade and what is the time frame of the trade going to be depends on if you found a wave that is going to extend a lot. Now, how do you find these waves? How the analysis done? For that, you need to understand two things. You have to understand that each and every Elliott wave actually follows an Elliott wave pattern, and it is not limited to 5 and 3. Mr. Chetan is saying it is useful for long term. It can be very, very, very useful for long term. For example, I can show you waves, and I was seeing a very powerful chart when NBCC IPO was issued, and about 3 to 5 months later, there was a very interesting construction of waves. It became a 10 bagger. But there are also times when you can be wrong on that, so you will get a bigger hit. Second, your biases with the waves can lead you on to bigger moves. And I'll show you some examples where a lot of long-term moves I've been able to see on the weekly charts. Also, many occasions, hourly charts also show you certain moves. So in those cases, you want to trade sometimes even using options, because if you get a very powerful wave, you can go to the option of a very far distance and get a very multi-bagger in options. Or you can hold on to the trade very, very strongly. All across gold, commodities, currencies, equities, everywhere you will see Elliott wave design repeating. शुभांकर जी आपका क्वेश्चन आपने नहीं पूछा, प्लीज आस्क a question. Any questions till now? No, you can type your question. You can type your question. In regular sessions where I'm teaching in a course or something, I do allow unmuting people, but since this will go to YouTube, there may be audio issues. Please, you go ahead, type it. I'm waiting, no problem. I'm coming to the examples, Mr. Costa. Actually, I want to keep it simple for the people who have to start understanding from the very basic construct. PUC wave 3 5 AC should look like Yes, PUC, very good question, but I'll come to that when going to I'm going to come down to the charts. I'll come to something like that. Thank you. Preetham ji is asking, as per your experience, in which sector will it work better? Well, again, Elliott wave theory is working everywhere, every time. As per my experience, the first thing one should not do is don't go to penny stocks, don't go to semi-liquid, illiquid stocks. Okay? Why? Because where the mass participation is very less. the importance of anything technical will be very less. Okay, don't go to penny stocks, don't go to illiquid stocks. This is one thing I can tell you. According to my experience, Elliott wave works every time. It works best in the smaller time frames, also indices, Nifty, Bank Nifty I've seen. I'll show you a lot of examples. I've shared with students also previously. Uh, all these also work a lot better. And I'm going to keep, for cost of G again, I'm going to keep a lot of examples, just finishing the theoretical part because there's so much to be able to understand before you see the example. Otherwise, you will not understand it, right? So it is worked in stocks also in different time frames. Now, for a particular stock, which may be in a certain trend, the signal to get into that trend came long back, and the trend is still continuing. You have to subdivide into the smaller time frames and see the sub waves. So you get things when you get things, and when you get things very clearly, Elliot rarely ever turns you down. Okay, and you have to understand something called an alternative count. When you're approaching a chart with Elliott theory, there will be counts which will be either this or that, and you have to consider both in order to understand that. Shrikant ji is asking, does it work in commodity also? Oh yes, absolutely. Oh yes, absolutely. It works in commodities and currencies, and I will show you examples. No problem. A lot of examples are coming up. Shubhankar ji is asking, corrective wave C can come down. No, no, I'll come to those things. Chalo. Okay, fine. I'll come to the leftover questions. And you guys keep shooting questions, no problem. Right? Let's understand the first thing. When you are looking at an Elliott wave pattern, okay, the Elliott wave pattern, the regular 5 wave pattern, I won't make it too complicated so I can show examples. It is not necessary that each and every pattern of Elliott wave, each and every wave is compounded into 5 wave patterns. It is not necessary that the 5 wave construction is there in each and every trending wave. So trending wave or a motive wave can be an impulse or it can be a diagonal. If it is the impulse, it is what we have done. It is what we have done. 5 waves up and 3 waves down and some waves within those. And if it is a diagonal, it can be a beginning diagonal or an ending diagonal. And what does a diagonal mean? A diagonal is a little different from an impulse. So for example, in impulse you saw that there are waves 5 and 3, right? 5 3 5 3 5 3 5 3 5 3 5. And while it is coming down, it is 5 3 5. And this is 3 waves up, 2 waves down. 5 3 5 3 5. Here it is 5 3 5. That is 5 3 5 3 5. This is 5 3 5. In case, because wave A here is a trending wave, although it is the bigger part of the bigger correction, it's a trending here wave. So this will be 5 waves down, 3 waves up, 5 waves down. Right? In case of a diagonal, the construction is 5 5 5 5 5. Sorry, 3 3 3 3 3 5 times. So you go like 3 3 3 3 3. So this is the ending point. This is the beginning point of a diagonal. This looks very different from a conventional impulse. It looks very different. 3, 3, 3, 3, 3. Right? In the beginning, there can be a beginning diagonal, there can be an ending diagonal. So if the entire wave is 5 waves, maybe the entire wave 1 is a beginning diagonal, or maybe the entire wave 5 is an ending diagonal, or maybe the 5 of 3 is a ending diagonal, and 1 of 1 is a beginning diagonal. So these are the possibilities, because each and every subwave which you will get into, right, will have these category of things. Yes. So these are going to be important categories to be understood, that any of these subwaves can be something else. Now kindly give me just 10 seconds. I need to just give me 10 seconds. I need to just do something once. Yes. So it can be either an impulse or it can be a diagonal. Right. Okay. Moving on. Good question, Shubhankarji. I'll come to that chart. And I will first importantly tell you the most important thing and the biggest mistake people make is that they want to go and count the corrections. You see, if this can be this, that can be that, which I just showed, when it comes to correction, it can be even more difficult. It can be even more difficult. The reason is it can be very confusing, right? Before we move into the corrections, there has to be a certain clarity, certain understanding, certain understanding. There's something called rules in Elliott, and there's something called guidelines in Elliott. There's something called rules and there's something called guidelines. There's something called rules and there's something called guidelines. When it comes to the rules of Elliott, they cannot be broken. They cannot be broken. I think a lot of you here know what the rules are. Wave 3 cannot be the shortest wave. The wave should be progressing. Wave 2 cannot be correcting more than 99, like it has to correct less than 100% of wave 1. Wave 4 cannot enter wave 1 territory. This webinar will not be about going too much details into the rules, but to show you the various aspects which people actually miss out. Those are the various aspects which they miss out. First of all, rules can not be ever cannot be broken. Right? Now you will come to a construct again suddenly and you will say wave 4 is going inside wave 1. Well, in that case, maybe the entire thing is actually not an impulse, it is diagonal, because those rules are standing clearly for impulse. That rule that 4 cannot go into 1. Right? So these subtle factors which people tend to miss out get them confused. And I'm saying this because I have gone through that phase where I have got confused with these stupid things. And I started looking into the various very small time frames. I started giving a label to each and every wave. I was right many times, and it is good, and it can be that you are right many times. But you have to prepare to be wrong in a certain manner. So, even more than you think, there should be filters in your analysis when it comes to Elliott wave. So you don't want to get too stupid. Sometimes the small time frames can be super duper clear. You need to capitalize on that, but only after enough practice. I don't want to say that you go tomorrow and start doing something. No, practice. Spend 5 hours today practicing Elliott. That is more important than going tomorrow and making money, because if the market is ready to budge on Wednesday and not on Monday, where the wave counts are coming together, then it's good. That is better. It's not necessary that you will have to make money tomorrow out of Elliott wave theory application. Right? So rules will be applicable, and if they pass the test of the rules, something important will come out. Something important will come out, because the rules are guiding us towards how the move can be. So what is it that will come out if we understand the rules in a very clear manner? We'll come to that with an example, quite you know quite good examples, and very fast we'll come to those things. Now, those examples which you are going to give on the basis of which I'm going to give on the basis of different guidelines will also include these guidelines, certain guidelines like truncation, certain guidelines like extension. Now you need to understand what these guidelines are. You need to understand the guidelines of value. Some of them namely are extensions, alterations and truncation. Now in case of an extension, what happens? The price movement of a wave, a subwave, can extend, right? So generally, for example, wave 3 is very long. Wave 3 is the longest wave sometimes. Quite a few times. Very often, wave 3 is the longest wave. Under that, in suppose wave 3 is extended. The 3 of 3 is extended again, as you can see on this. Wave 1, 2, 3, 4, 5. Look at the circle numbers. Circle numbers. Wave 3 is extending, and wave 3 of 3 is extending as well. Look at the bracketed numbers. The bracketed number represent the subwave 1, 2, 3, 4, 5. This is wave 3, total wave 3. Inside that, wave 3 of 3 is again extended. So a lot of people who ask me about Elliott, generally they come up with a chart on a very strongly trending stock, and they say suddenly that this is about to top out. And I don't understand why they say this. Because you have to stick to the trend until the trend is reversed. It's the clear proof of the fact that the trend has reversed. If you are not being able to do that, it means you're going against the trend with a logic. So when you see that the waves are becoming smaller, it may lead on to a bigger movement within the trend. Sometimes you will see that there's a construction. There's a construction of movement. Yesterday itself, I was teaching a particular group of students on the basis that if you look at some of the movements, right? Sometimes the movements, let's take these movements, for example. This movement, you see that there is a construction of the move a very healthy move. With regular correction, a lot of trading happening, a lot of exchange between the buyer sellers. So this particular move, for example, later espouses a big move. In Elliott terms, these can be wave 3 of threes, which are coming as an extension of the larger wave 3. Are you getting my point? Now, if wave 3 is very powerful, ought to be highly likely that wave 3 will have high volumes. And a 3 of 3 may be even having higher volumes. So, maybe the times when you see the big breakouts happening, a lot of them are wave 3s. I'm not talking about breakouts that are in your imagination. I'm talking about proper breakouts with good volumes. They do happen regularly and they do yield results regularly. Your Elliott reading, doing your Elliott reading will increase your potency of reading patterns as well. So you see, when the extension is happening, all of a sudden this move is started to gain power. Until then, you didn't see so much of power. So you are not just supposed to identify the beginning of the wave according to Elliott waves. You are supposed to identify when it is best for you to trade. So if I enter the move with the trend in this candle, there is no problem. I can hold on to the trend, isn't it? So more such examples are coming up. Now, before we go to those, just small little bit more theoretical portion, not to make you too confused, not to go deep into things until you are ready to understand them, because there are various things. For example, in Elliott, there has been a only a course on Elliott, a 10 session course I've done just done only on Elliott in the earlier part of this year. And in my regular course also we take 1 to 2 sessions on Elliott. So I understand that it can be difficult without deep explanation, all the way from the theory, all the way from the textbook. But let's understand that sometimes there can be different kind of corrective waves also, what they stand for, what they mean. In case of an extension which we did, we have to understand while you're counting the waves, just finish this. So suppose you see something going up, correction, the next wave is here, and you see something brimming over here, it's not going higher, and you get confused what is happening, and you see a sudden move you see. So when you see something which is out of place, you start understanding that this could be an extension. If this is wave 1, this is wave 2, this can be 1 of 3, this can be 2 of 3, this can be 1 of 3 of 3, 2 of 3 of 3, and so on. How many of you are understanding this particular extension example I just gave? Raise your hands, please, those who are understanding. Clearly raise your hands, loud and clear. Loud and clear, raise your hands, those who can understand my explanation of the recent example I just gave. So that means those who are not raising their hands, they're not following the class, is it? If you have any questions, ask. Okay, a lot of people are raising their hands. I'm happy that you understood well. Before we move into the example, a few more things, 1 or 2 more things. Okay, some question is being asked. I'll come to that, Srikanti. Everything will happen. So when you are going to identify a wave, as Srikanji is asking, that this is wave one, one of three, two of three. This is not just on the matter of you are identifying and you're pinpointing and you're labeling. It is a matter of probabilities, right? Because wave this wave one is happening, okay. First of all, I don't know if this is a wave one or this is a wave five and it will go down. It can be some wave three and this can be one wave five. It can go down. Yes or no? My assumption is that the trend is intact until it is reversed. If this is a wave one, this is wave two, and there is no necessary that this can't just go fly like this. It can. But what if in this patch of area, after I conceive in my mind that yes, this is a wave three about to begin, there is another subwave and then it goes up? Can happen. So you are never identifying a wave like as if you're pinpointing it. You don't identify a wave, it comes to you. You find yourself in a wave. Getting the point? You find yourself in a wave, it comes to you. You have to determine what are the probabilities starting from here. What are the probabilities starting from here? Right? Yes, Pritamji. We can combine a lot of things with waves, and that is what I'm going to come to very soon. We have to combine tools together. So when I'm looking at a daily chart, just to explain those who are asking, I'm looking at the daily chart or say hourly chart, and I see this sort of construction. I am first of all not going to preempt personally. This is my personal thing. I am not going to say that this is wave five until and unless there is enough bearish evidence. I will not go against the trend. Now, if this goes down and I sell later at a pullback, there is no harm. You, Elliot can explain every wrinkle in the market to you. Elliot can explain every wrinkle in the market to you. Elliot can explain every wrinkle in the market to you, but you don't have to trade any wrinkle, every wrinkle in the market. Are you getting my point? You don't have to trade every wrinkle in the market. Suppose I find that now the trend is bearish, and I don't use just Elliot for it. I use my other analysis and other aspects. Maybe Elliot sometimes give me an idea that this can turn bearish very soon. So yes, those times I will be more careful. Those times I will turn around my positions. But something which is going on bullish, and then the waves ultimately show a reversal. I can trade the pullback. I can sell here in the pullback because you will get ample opportunities to trade. People are looking for bargains to sell at the very highest point and get by the lowest point. That is the problem. Elliot teaches you something very, very clearly that whenever there is a move happening, the construction of the move will give you opportunities. Will give you opportunities. Even if you miss the big ones, there will be some ways you should be able to identify. So you have to develop a perspective of reading a chart. First, you have to do is practice. First, you have to do is go back and practice. Okay, this is how these things work. Then you slowly and steadily develop the things you are comfortable with. Some people are comfortable trading the wave 5. Some people are comfortable best trading the wave 3. Some people are comfortable trading the wave 2. So these will be certain things which you will have to understand. Where you should be trading with the trend, what you should be doing, right? So not necessary that every time you and I have to be knowing Elliot and be on the same page. as far as trading is concerned, right? Now, similar to impulse and diagonals, even corrective waves are certain Elliott wave patterns. It is not always just three waves down, right? It is not always just three waves down. As I said, what you see on the textbook and what you look at the chart for, these are different things altogether. And you need to develop the eye, you need to develop the vision, you need to develop the identification power to be able to analyze that in that manner. The zigzags, flats, and triangles. These are the different types of corrective waves. Under flats you have another kind of this thing, right? Regular expanded running. Under triangles, just to make it simpler for you, I made this language. Symmetrical triangle in Elliott jargon is called contracting triangle. Ascending and descending are barrier triangles. Broadening are expanding triangles. So these are the various types of waves which are just Elliott wave patterns. So a lot of people want to find the 5 and the 3 and the 5, but they don't want to know what the Elliott wave patterns are. If you don't know ABC, how will you construct totally what the sentence is? Right? You have to first understand what Elliott wave pattern it can be. And personally, when I am as a trader, I don't want to push into everything. If I go deep into 10,000 things, I will not be able to make the best of anything. So what I place myself is I find an optimum level of performance with each and every strategy and each and every concept I know. So suppose I know candlesticks very well and patterns very well. Okay. I will approach the markets in a way where if something potent is happening in the candlestick, I'll be the first person to keep my finger on. But if something which is very low probability happening, I will not go to that. So I'm going to look for things that are going to be safe for my trading. Because the best traders are not the traders who are making biggest money. The best traders are the people who manage risk in the best manner. My analysis should always get me to places and pockets where my risk to rewards are amazing, where my probability is amazing. So I like to play on that rather than wanting to trade every wrinkle on the market. Sometimes knowing the flat, knowing the triangles does not really help me so much until it is already made. But sometimes it helps me. Okay. So which then you have to choose between you want to do everything or you want to do thing what makes money. Okay. So flat zigzag triangles, impulse diagonals, all that put together with the different types, about 9 to 11 different types of just Elliott wave patterns are there. In which there can be an extension, there can be truncation, all of which I have not explained, I know, but not possible to do it in just one class also. Right. Just to show you, a regular flat looks like this. We spoke about a regular flat. Now generally ABC you will see C is making a significant lower low. ABC of a certain wave you will see that the wave C is making a significant low ABC. Okay, where this is the A and this is the C. And B is the pullback in the correction. So it's the correction of the correction, wave B. You will see C is making significant low. But in case of a flat, C just makes a small low and goes back up. C makes a small low, right? And how does a flat unfold? Till now you have learned that wave A unfolds in 5 waves, B in 3 waves because it's a pullback, and C in 5 waves. But in actuality, when it comes to a regular flat unfolds in 335. Three waves down, three waves up, and five waves down. Right? The wave B pulls back quite considerably near the wave A high, and wave C just makes a small lower low. So this is a very different pattern from what you may have normally conceived as a Elliott wave correction. But this is the truth. This is how things happen. Because a sideways correction is also a correction, right? It is a correction more in time, less in time, but still a correction, right? Think about it. Give me 10 seconds, I'll be back. I'll just be back from a water break. Let's take a 1 minute, half a minute water break. Okay? I'll be just back. I'm back, guys. Yeah, I'm back. I'm back. Taking a small water break. In that small break, one or two people left, and that I'm with due respect, I'm saying that if people have left just because I took a water break, really, you need attention span if you want to be successful in trading. You need attention span. Now pay attention to the examples I'll be giving, right? Pay attention to the examples I'll be giving. Similar to a flat correction, they are combination patterns. Uh, where, as in, you will see a sideways correction or a little correction with sideways and a combination and a combination of something else, little downward move. Yes, Shubhankar. So when you see the combination of different Elliott wave corrective patterns in one at one go, and then you look at from the classical technical point of view, which is amazing and which is to be very strong for trading. You need the basics very strong. But when you look at that, and with the half knowledge, if you want to apply yourself, then the problem is you get caught Now pay attention to the thing which is on your screen. Pay clear attention to the thing which is on your screen. And I'm not saying that what I'm about to show is going to be something exactly like this, but it is very similar to this, right? Yes, Subramanian, it can. You see something? Now here is still a very, very clear looking ABC, because this is, I'm sorry, this portion is 5 waves down, this is 3 waves up, right? Now when it comes to this particular scenario, which is something 3 waves up, the first thing which comes to our mind is, if this is a pullback, let's go short, which is not wrong, which is not wrong. But this is the daily chart, right? Sorry, this is, it could be called like in the weekly or a very long daily time. I need to see a construct of some waves, which is show me the similar thing. Because this could be a part of, yes, it could be a part of, this could be one, this could be two, and this would go down. But this could be a part of a corrective move in which my count can go 3 3 3 3 like a triangle, or there can be a combination pattern. So first and foremost, I need to mix my basic technical analysis with the particular stock. Now this is PC Jewelers back in 2016 area. I'm going to zoom out a little bit on the same and show you how this is looking after zooming out. Well, even after this big mega fall, after this, it's still gone up. Even after this mega fall. So if you expect that there's a steep move towards the support area, and that is going to break the support area just because it's a steep move, but there's no structure to the move, then there's a problem. On the other hand, I'll show you some subwave count, which is with the larger trend on the same PC Jewelers, with the larger trend, same PC Jewelers, with the larger trend. Where is it gone? Yeah, let's take this area and let's take this area. I will answer your question, Subramaniaji. I get your saying. It's a long answer and answer. Right? In this area, at this point, at this point, some of my students are here who are part of the inner circle group. I had already called off this point as a very major possibility of a move starting. Now, what is it that I was looking at? What made me say this? When I plugged in the hourly chart, right now I don't have that back hourly data. This seemed like a wave A, wave B, and wave C. I analyzed very carefully. I went back, this was seeming like a ABC, ABC. So when I was with the trend, this entire wave here ended a subwave this began, from this point to this point, a subwave began, there was a very crucial construction which also seemed like a very classical pattern, a very classical pattern of an ascending triangle, you can say. At least a resistance breakout I would consider. And this breakout led to a big move. Now each of those moves was also, if you went to calculate the waves, came out correctly. Now this is the normal resistance when you look at the patterns. There's always a question, so it goes up, then it goes back a little, and how do I understand? Well, to be honest, if you understand the wave counts, you will understand that as well. Because there you have to give market a little space to breathe, number one. Number two, in many cases, you follow the trend individually in a different manner. You look at it in the pattern construct in a different manner. So if you went long, even over here, even if one physical parts of the, which I recommend all students to go with the physics of the pattern. What is the momentum of the pattern telling you? What is the momentum of the pattern? Just the wave counts is good, but after the wave counts, wait for some physical evidence which will be good. Or don't go in a full size normal position until those physical evidences are there. So being with the trend is going to always be more beneficial for me. And Elliot is going to put me into places where my risk rewards will be good, or my probabilities, or both will be good. Now let's take the example of our very own, one second, index. Now you have to understand that the basic construct at every given point of time will follow. I'm putting on the weekly chart. Actually, I keep the daily chart. I'm going all the way back towards 2011, from where I see waves have started. 2011 has been the low of the market, December. All the way till now, we have not seen that low again. Right? Let's count some waves. Okay, Prakash, no problem. You keep an eye on the recording. Yes, yes, yes. This is wave 1, wave 2, wave 3, wave 4, wave 5. I see a 5 wave, out of which wave is extended? I want answers. Which wave is extended over here? Any answers? I want everyone to participate. Which wave is extended over here? How do I know that this wave is extended? How do I know that this wave is extended? Because in the normal visual idea of my whichever time frame I am in, it is showing me those subdivisions. Right? Now, how many of you can clearly see an A, B, C over here? Clearly see a B, C over here. Clearly see A, B, C over here. Raise your hands. Raise your hands loud and clear. Clearly A, B, C you can see. ये एक ABC इधर पे है. After the 5 waves, from this point till this point, there is a clear ABC movement. Now anybody using the Dow theory will come and say, sir ये तो lower low शुरू हो गए यहाँ से, अब ये नया low बनाएगा. Problem. I'll give you such examples. If you go back internet pe, you will see the news media also talking of the same nonsense, not getting the construction together, because news can trying to give forecasts, right? They're trying to give long-term forecasts. If you go to this area, I can bet you, okay? You go back to this area any day, you will find financial analysts coming and saying the Nifty is going to 9,100 and above again. In this area, people have said this because for them, the Dow theory, the higher high, one higher high, now Nifty is going to go back. They are not wrong, but they're incomplete. There needs to be something supplementing the Dow theory. How many of you can clearly see 5 waves down over here? 1, 2, 3, 4, 5. Now this pullback, which is sharp, ultimately led to a distribution and much further fall. Okay, anyway, I'm going back to that area. So you see a clear ABC over here. Now let's get a little more into this. Let's understand this construction. Now, different shapes, sizes, everything comes very differently in Elliott waves, right? If I pick up only this wave, I have to change my pen color. 1 second, guys. Comes to this wave. Comes to this wave. Can you see a 1, 2, 3, 4, 5 over here? Can you see a 1, 2, 3, 4, 5 over here? 1, 2, 3, 4. 4 is sideways and 5. How many can see a 1, 2, 3, 4, 5 over here? Raise your hands clearly. Raise your hands those who can see a 1, 2, 3, 4, 5 over here. Right? I'm going to slow down if a lot of people are not understanding. So please tell me if you're understanding. Okay? Great. So let's understand this. Zoom in a little bit more. What do I mean by 1, 2, 3, 4, 5? Now, the Elliott principle of alternation is trying to tell me that if wave 2 is sharp, wave 4 is flat. Apart from that also, I can clearly see 1, a deep sharp 2, 3, which is powerful, 4, which is sideways, and a wave 5. And after that, I can see a small ABC, which will be more clear if I could have the hourly charts. But yes, in this case scenario, clearly see this. Now I'm taking up waves so that I can go forward. I'm not taking up each and every wave, but I will take up things. So an overall 1, 2, 3, 4, 5 after low level of corrective ABC again led to an up move, which is dividing. And during Modi ji becoming the prime minister, we've seen one of the most powerful moves. Right? We see one of the most powerful moves when Modi ji became the prime minister with one of the highest volumes. Later, after the big move and then a big correction, we see more different kind of constructions, and we will keep seeing different constructions. Every move in the market which will be, has been, will never be again. Every move in the market is superbly unique. It is just that the technical analysis follows certain similar patterns of doing things, understanding things. Are you getting my point? What I'm trying to say? Then I'll come to more examples also. Let's come to this area where Gujarat elections have happened. Right now, yesterday in class, I was telling everyone you must look at some things like these interaction points. I was doing a different topic with them where there are potential areas of reversals. So if you add potential area of reversals to wave count, somebody just asked who was there in this class. Yes, you can do that, not a problem. But what is more important is to first understand the first layer is the structure of the wave. So if these two things come together, good. Now you can see a clear ABC over here. This is Gujarat election time, and not that I would have traded very aggressively in the news, but yes, this kept me on the better side of things. Because of this ABC which I had seen earlier, and there was a higher high above this wave B. When ABC is made and higher high above wave B is there, when ABC is made and there's a higher high above wave B, you get a confirmation that any dip can be a buy. This higher high was made, and after obviously such a volatile move, there is a chance the market contracts. And some of my students are here. Here I had mentioned to go long for a big move which is coming. And it went hand in hand with other technical factors as well, right? So this is how you will have to understand wave counts. Okay, understand why. Like for example, this pullback is not a reversal. If you have, if you have in your mind clearly a clear picture of what these waves can potentially mean, at this level, I was very confident that the market will take more, more new lows are left. That is how Elliott can be useful to you. Does not have to mean that every day, every tick, every something is selling. It is very different ways it can be useful for you. So in this market phase, if I captured a big movement, of course it is of great use to me, right? So you have to understand such things, imbibe such things in certain manner. Okay, now for example, I'm looking at the construction of a continuation cup and handle of certain other things. Say the interaction points which were tested here, the zone which is tested here is breaking out again. Now, the first move, if I say is a wave 1, second move I say is a wave 2, third move is a 1 of 3, a 2 of 3. Is this a 3 of 3? Yes, it is. What are the alternate possibilities? The 3 of 3, 4 of 3, 5 of 3 is over. Alternate possibilities, all the very less likely. So any deep correction, one can likely see much more up moves. Yes or no? So this is something literally, it's like literally this is a possible wave count, so I can be wrong. I I reserve the right to be wrong. But yes, a lot of things I can just literally give you free because right now the market we are in, right now the phase we are in, I'm able to say that. Sometime back when we were here, we had a webinar. So I was not able to say certain things. I was able to say certain things that we go more low. So not necessarily that it will help you until you know your trading skill right. But yes, this is the larger possibility. Larger possibilities I like to keep in my mind. And when other things come together, yes, I like to go into this. So you're not supposed to get confused. Like in, for example, this patch of area, there's a high tendency for people to get confused. What is happening? Because they'll go deep, want to look at the chart, want to get biases in a very short term. And sometimes it may or may not work, right? Bank Nifty. Those who follow me on Telegram, and I don't give calls on Telegram anymore. I give only educational things, and which I love to do because there's no point giving a call one time. It is the long term thing. And even if I give something related to stocks, then it is videos related to my analysis for the coming day or week. So this particular zone was a high potential support zone, and we discussed it with my students in class as well who are in the course. And this area I'd given a buy call that okay, now we are going higher. Now you see what is potentially happening in scenarios like this is certain big subwaves, certain powerful waves are starting with subwaves which are big and swift. Here I can use my understanding of candlestick, and this is a hammer pattern for those who don't know. This is a hammer pattern. You should go to my YouTube channels video on candlestick to get to know more about candlestick, right? This hammer pattern I combine with my understanding of a very large wave going to start, because I'm not going too deep, but other wave counts were telling me so, right? And when it started, certain corrections were supposed to definitely be bought into. So the Elliott bias is helping me. You see, it is not going really so much hand in hand with the classical technicals, but when it does, it gives even better results. Even better results. For example, I saw that there is a possible small lower low made over here, and we are going higher. Because this may be truncated, this may be anything. So even after the Karnataka election, which told me that there could be a higher high to this, there was a higher high made, although small higher high, because wave 5 became less powerful. And if this is wave 4 and 5, and this is a big correction, we are much higher to go. So, a lot of things keep going together when you solve it like a puzzle. Now, somebody's questions were there, and I'm going to wrap this up so that a lot of people don't get confused, right? Very soon we're going to wrap this. Some questions were there. Any questions till now? Anything fresh? So, Subramani ji asked me earlier, can a triangle appear in all waves ABC? Well, a triangle is made up of a ABC, DE. It can be a five-wave triangle. But ABC, within that, if there is a B, it can be a triangle, or ABC put together, it can be a triangle, but not a different triangle in ABC. A combination of triangle can be there. So, yes, in that case, a combination of triangle plus triangle plus triangle. In that case, we can say yes, ABC or can be a triangle. No doubt about it. We can say something like that. Now, one more example which I was just giving earlier also, DLF. Now, look at this example. Look at this example. Can you see a very clear ABC? Sorry. Raise your hands if you can see a very clear ABC. Now, is it difficult for you to understand that there is a possible up move? Because it has made higher high above wave B, and there is momentum, there is a trend line breakout. Yes, corrective waves can be confusing. Getting my point? Getting my point? Corrective waves can be confusing. Okay, Pushpiji, yes, I'm coming to that again. Yes, so Pushpiji is saying, I'll come to, so let me just put that on. 2013 area where Nifty counts I had left, yes. So if I look at the wave construction from here, one, two, and if I'm able to see what happens is here is where the confusion happens with people. So I had a counter with an expanded flat correction. Expanded flat correction means that wave B will make a higher high. So this is A, this is B, and C make just a lower low. It made a small low below the support area but came out with very high volumes, etc. And this is how the 1, 2, 3, 4, 5. So this is over here a certain wave count ended 1, 2, 3, 4, 5. Then a 1 started, and this was 2 over here. This was 3 of 3, 4 of 3, which was sideways, 5 of 3, which became the election day result, Modi ji's, right? right? Modi ji's result. And there was a wave B, which was a ABC pattern. A B is a three wave pattern because B is a correction of a correction. Right? And then we see a further sell off near the wave 4 area. Now, one of the guidelines is that sometimes the wave 4 of the previous wave becomes the wave 4 of a previous wave becomes a very important support area. Now, going forward, some waves were left because the bigger wave 5 was left, and after that 4 and 5, then we got into a complicated correction. Now, deciphering that, I'll have to explain a lot of different kind of combinations which are possible, and I have to go to the hourly data which I don't have right now. So that part I'm not going into. But yes, towards the end, we see we see that this has completed the big wave, right? And where was I? Yeah, completed the big wave. I started a correction, which was first 5 waves down, then a sharp pullback, and then again it extended in certain corrective wave patterns which were including impulse. So if you see one, two, one of three, two of three, three of three, four, five, and then if this one which begins over here leads on to till here, begins over here, leads on till here, leads on to a wave 3, 4, 5, or perhaps the 4 or 5 could be there. There could be some alternate wave counts over here. Could be some alternate wave counts over here. And that is why I'm not going into so much details. I hope you understand, because it will take a lot of knowledge for you to absorb those things, basics about it, right? So Elliott wave theory can be very, very, very interesting, and a lot of things will time and again come together in different time frames to be able to tell you. For example, there is a construction of a healthy move from here to here, right? Now, if I look at the smaller hourly wave counts, they will be more helpful for me in these such scenarios, right? Now, whenever you see a strong patch of move and you can count that there are many subdivided waves which are creating a move, then any pullback is a buy, and so on. So those kind of style logic you will have to make for yourself. Mr. Manu, I'm purposely not getting into stocks because till now I've got so many stock queries that it leads to a lot of different kind of scenario. Like, this is meant for you to learn something, right? So I've already got about 7 to 8 people asking me about particular stocks, and I don't want to get into that because once I start getting, I know 7 8 more requests will come. I will not be able to say no to them. But yes, most definitely I will take up more examples and more webinars will be there of such sort. And if you want to talk to me about anything particular, then you can contact me personally also. That is not a problem, right? This video will be going on YouTube. This video will be going on YouTube, and those who are genuinely interested to learn more about technical analysis, if you're genuinely interested to learn more about technical analysis, then what I recommend is that I am teaching a 15 session course. In that 15 session course, I take up from very base level when I start with higher highs and higher lows, all the way, all the way to things which are very, very advanced. That includes Elliott wave theory. So the name of the course is Technically Sorted. The name of the course is Technically Sorted. And It is a 15 session course, online course. So you will be able to ask questions just as you were able to ask earlier. But you will also be able to ask if needed. I will sometimes unmute you, so you can contact me personally if you want to, if you're feeling interested in learning. The fees somebody is asking, the course fees will be 12,500 rupees. Earlier it was 15,000 rupees, so it's become 12,500 rupees, which is a major discount. It's a 15 session full course, and you will be able to start things from very basic level. The 15 session also allows us to go together. You get my point? The 15 sessions also allow us to go together in a manner where we are able to gauge the markets together, what is happening, what we are learning, etc. The course content includes all the way from the basics, which includes patterns, candlesticks, trend lines, line studies. Then we move on to some indicators in-depth level, right? So those kind of things are there. Then later we move on to options, one or two sessions on options and futures to understand the derivatives a little better, right? We move on to RSI in a very deep manner, and we also end up giving you a lot of handouts, support. Lifetime group is there amongst my students, where all the past students are there in one group, and eventually if there are any updates to the course, I will share with them. This week we did something very interesting. We did very interesting thing. That was to actually have one of our students in the group give a webinar to other students because he came up with some strategy and idea. And all of that is for free once you've done the course. That never stops because I believe learning never stops. And it's just that we need to come to a common ground first to be able to learn more together. So if anybody is interested in that course, from where I start, very basic. All of you know that I've done completed my chartered market technician. I have learned about, say, candlesticks, patterns, everything from the best of the authors in the world, and an assimilation of my learning and experience of working with hundreds of traders throughout my life, as students, as colleagues, that has given a lot of experience. And what I really embark upon over time is that technical analysis is good, but always use the trading perspective to take it. So if you can trade your technical analysis, that is even better. That is even better. So a bit about trading psychology will also be there in the course. So the course details I will message in the Telegram channel through which you all came. If anybody is interested to join the next batch, all you have to do is contact me on this particular number, and and within this week to book your seat, because in every batch I take limited number of people. I keep getting calls from places. I get limited number of people in one batch because I am able to pay attention to each and everybody's question. There's an optimal level there. So once you want to join, you pay a 3,000 rupees as a registration fee, and the rest of the fees you pay when the batch is ready. So as soon as the group is ready, you will be added to a group. When the group is ready, you will be able to join the course when the date will be announced, like that. I'll book your seats as you pay the 3,000 rupees advance registration. So all those who are interested, kindly contact me directly, because there are a lot of queries, a lot of things I keep getting. I generally these days don't make extra too many WhatsApp groups because it becomes a little bit of a headache. If you are interested, only genuine people can contact me. And this particular video, this entire session, first of all, I really hope that you took away something from this. Really hope I'm in all your interest of learning, irrespective of you joining me in other way or not. I really hope today's session has been really great for you, right? This entire video will be uploaded on YouTube. You'll be able to go through this. And I hope that we'll cross our paths again in some manner or the other. There will be free webinars from my side from time to time also, and I will message the details of the course to you. Any last moment things you want to ask, any feedback, anything you want to talk about, I'll be more than happy to. I'm sorry did not take up a lot of stocks because there were so many stock queries coming. And as a person who is educating you, it is my interest to teach you things which will last with you forever. So I don't want to make proclamations on stocks until I see them something in that, and I will put it on my YouTube channel and my Telegram channel immediately. Okay, thank you everyone. Thank you for those thank you messages. Uh, Really glad to have all of you here today. It was an amazing session. I had a good time, and I hope you did too. Thank you so much, everyone. Have a great day ahead, right? Have a great day ahead, and we'll come together and keep in touch. My overall Telegram channel, which is like another channel altogether, which is not this. If you're not there, I will add you there as well. You guys too have a wonderful day. Thank you, everybody. Sumit, Ravi, Babarish, everybody who was messaging. Okay, take care. Bye bye. Enjoy, and I'll see you soon. Thank you so much. Bye bye.